Good morning. Welcome to the XM.com weekly market update. We're joined once again by Pete McGuire, the CEO of XM. Pete, thanks for joining us again.
Well, good morning, Andrew.
Plenty of activity, particularly on the back of what happened in the US last week, but we'll start domestically. As we've spoken about for many, many weeks now, the Aussie was under heaps of pressure. But on the back of that CPI number out of the US last week, the Aussies had a pretty decent sort of recovery.
Absolutely, stellar run. It's currently trading at 67, right on the knocker, and we've seen that US dollar absolutely crater. Aussie's up, euros up, pounds up, yen's up, everything's up against the dollar, so it's been very strong. Also, gold's up considerably, so it's been a great week for trading, Andrew.
Yeah, it certainly has. So, and once again, I think it was always going to happen at some stage. The US just couldn't keep going on the trajectory that it was. So not unexpected, but I think for a few of those other currencies, a little bit of relief there. So, and particularly in the Aussie, on the back of that, we had some data last week as well, the Westpac consumer confidence number, so which obviously came in a bit lower, which is not unexpected on the back of what the RBA is doing with their interest rates.
Well, exactly right. Here we are at 78. So, yeah, wonder where it'll be by, let's say, February or March, and the impact as far as inflation and that weakening consumer confidence.
Yeah. I guess, once again, particularly coming into the back end of the year with Christmas, it's always a bit of a different time of year. Like, does that maybe get a little bit of a pickup over that Christmas period, but then sort of fall away again early in the new year? So, yeah, only time will tell.
Well, exactly. Time will tell.
Yeah. Japan, CPI is creeping up a little bit.
Yeah, it's been on fire. They reckon there'll be a 0.3% growth quarter on quarter. Very, very strong, a solid clip. And that overall inflation number, as that was GDP I was referring to, the overall inflation number creeping higher. It's been a dynamic market. I mean, we had that yen trading at the best part of that 138 level, down from 149 or 150, Andrew, in the last 5 to 6 weeks. It's been incredible for the strengthening of the yen and the weakening of the dollar again.
Yeah, and it's interesting. You look at that market compared to a lot of the other markets. The CPI is still very low compared to all those other major economies. But once again, it's starting to creep in that direction as well.
Yes, exactly right. Maybe we should all hold interest rates at zero, and then we may be the similar mindset or the similar performance as far as Japan. How's that?
Yeah, well, I think the equity markets will be happy with that, Pete. So it's going to be all one-way traffic. So,
yes, exactly.
Yeah, and obviously on the back of that as well, once again, like we spoke about earlier, with the weakening US dollar, that's just strengthening all these other currencies.
Yeah, I mean, when you're looking at that, I mean, we're not talking about a currency on the back blocks of South America or in Africa somewhere. We're talking about the Japanese yen. And when you even go back to March of this year, as demonstrated in the chart, we were running that 115, and then it was off to the races. It's been incredible. And if you showed me that chart 8 months and you didn't put US dollar yen there and maybe different numbers, I might be able to figure it out, but different numbers, you would have to say, what on earth has happened to this currency? Yeah, and the last 8 months have been dramatic. And let's see where the next 8 months take us, because traders and Mrs. Watanabe, the wonderful, we christen her Mrs. Watanabe, the Japanese housewife that trades currencies. Mrs. Watanabe has absolutely, she'd be driving a new Nissan GTR, mate.
It'll be an interesting sight.
Yes.
UK, still plenty of problems there though. Once again, that we've got double-digit CPI. Once again, do we hit 11% soon? Probably, but still, it's a pretty ugly-looking chart.
It absolutely is, and that 11% in October, everyone's saying you'll be through that number. And where are we? We said a couple of months ago together, will we be at 12% by Christmas? Well, if you're at 11% by October, then maybe we could well be at 12% by Christmas for the UK, and the pound currently sitting at around about 1.17. Only 7 weeks ago or 6 weeks ago, because we've had a few prime ministers over there, Andrew, in the last 2 months. Everyone seems to, you and I might have a go in 2023. Wonder how long Rishi Sunak will last, and you've got a pound sitting at 1.17. It's just absolutely, that 103 number when Liz Truss was there, all the way to 17. It's just extraordinary trading opportunities.
Yeah, the currency boys, no doubt, will be having.
Oh,
Well, you think that well, plenty of opportunities, if nothing else.
yeah, I mean, this year has been dynamic for trading, and the performance globally from the investment houses that have retail traders has just been extraordinary because everyone has done extremely well, the majority anyway.
Yeah.
Don't get greedy, Andrew. That's the key.
It's a financial markets, Pete. I think
Yep.
that's the greed is very synonymous with it. And GDP.
Yeah,
Like,
3 point.
well,
Sorry,
the
go on.
only positive there, like it's a positive number still. So
Yes, it is. We'll have that new read probably for October. I think that comes out sometime this week.
yes.
So I'm just looking here, UK inflation. So we'll have that GDP number as well. 2.513. It's still clipping above a positive number. Let's see where we are again by Christmas. So the new year will tell a lot of interesting stories. 23 is going to be one hell of a year, Andrew.
Yeah, well, we've had that in 2022. So next year, it's sort of interesting. Next year, like, will there be recessions? Most likely.
Yeah.
How bad will they be? That's questionable at this stage.
Yeah.
A lot of I think these future interest rate rises, which there will still be more, but you would sort of think the market's probably pricing a fair bit of that in at the moment. Yeah, I think recessions for quite a few countries will happen. It just depends how nasty they are. So
yeah, exactly. Hope Robert Kiyosaki's not correct.
yeah. US CPI. This was the this was the
damn
number
buster.
that changed everything in the last 7 days, basically.
You bet. Well, there it is. That tells the story. 7.7. They were very happy. Anything under 8, and it shot to the downside. So let's just see where that goes again. A continuation. Are we back at that? If we hit the peak in June, let's hope we have, and let's hope that the US strong performance with GDP, overall sentiment positive, and we're in the hands of the consumer and the big services industries, aren't we?
Yeah, but a lot of the data now coming out of the US is pointing to a slowing, with rents down, house prices down, shipping costs down. So I think that is feeding into the inflation. I think, and they'll probably be able to get that inflation back somewhere between 5 and 6 relatively quickly. The hard bit, I think, is going to getting it from 5 down to 3.
Oh yeah. And how aggressive are they going to be as far as rate rises? I hear Waller, the vice chair, he's got his own opinions as far as slowing the trajectory or the interest rate rises per month. So he and Jay Powell have got their work cut out. We'll just have to see what they come up with over the next couple of months. Yeah,
very much. And finally, let's have a look at the 10-year. Obviously, that's had plenty of movement. So around that 3.85 mark at the moment. It was around that 4.2, 4.3. So that's come off quite a bit. But once again, obviously on the back of those CPI numbers.
Yeah, you bet. It's nearly off the best part of 10% if you're looking at the movement number from 4.2, 4.3 down to 38 or 3.8. So again, it'd be lovely to be there this time last year where you're sitting at 1.5, not 4%. And it's just, it's been an extraordinary year, Andrew. It's been a great opportunity again for currencies, commodities, stock indexes. Everything has been game on, and I'm looking forward to running this each week in 23 with you and what unfolds, because I don't think either of us are going to be surprised.
No, and I think, sort of, as you say, looking back 12 months ago where the rate was, and all the central bankers at that point in time were saying rates are not going to go up until 2024. So, which was obviously hasn't happened. But, one thing with the central bankers, their crystal balls aren't overly accurate. So I know they've got to comment on a lot of stuff, but very rarely do they get it right.
Well, that's exactly right. So let's just, strap ourselves in. It's going to be a bumpy ride, and I'm sure it'll be a bit of fun.
Yeah. So, all right, Pete, that's good to catch up again.
Lovely to see you, Andrew.
Thanks for your time. We'll catch up again next week. And that is the XM.com weekly market update.